everyone. Thank you so much for being here. And thank you so much, Caio and Benti. This is such an interesting topic. So without much further ado, let me ask you, Benti, what are the unique considerations that a fintech has to have before deciding to go for an IPO?
The most important thing is having something to do with the money. So everyone, considers an IPO as a potential exit strategy. An IPO is not an exit. An IPO is a strategy for raising capital. You can raise capital in the private market, you can raise capital in the public market through an IPO, or you can raise capital through a debt, right? So you have three options. You have to consider those three options, and you have to have clear use of proceeds on what you're going to do with the money. If you have nothing to do with the money, you shouldn't go public. So that's the first take I would say. And the second thing is, when considering going public, you have to consider that your company is going to change a lot. We're not public yet. So I'm not talking about experiencing right now. However, we've seen a lot of entrepreneurs that face challenge to the point that they sacrifice growth over going public. And that's very dangerous for a company that needs to grow to keep delivering value to the investors.
Caio, thinking about the market, we know we haven't had an IPO in Brazil in 3 years, and the market outside hasn't been, good as well. We have had problems everywhere. How do you see the market right now? Is this a bad time for a company to be thinking about an IPO?
Yeah, so thanks for having us here. I think every time that you have a lot of market volatility is a bad time for an IPO, right? So you're basically trying to price an asset in which will depend upon future cash flows, future growth, in a moment where nobody has clarity on where the world is going, what are the policies that we're taking. So we usually say, so it's not the right time right now. I wouldn't say that, but there have been some companies that went public this year. Some of them with success, others not so much. But when you look at their investors or the capital base, they're needed to go public, right? They didn't have any other path, which is something that is not the best reason for you to do an IPO. But right now, the market, nobody knows where it's going. Like with the tariffs, the global geopolitical. Even in Brazil, there's a lot of uncertainty. So there's a lot going on in the market. So it's very hard to price anything today on the public markets.
And Ben, thinking about whether to do an IPO in Brazil or outside. We saw a few years ago, 3 years ago, we had Nubank, which did a fantastic IPO in New York, in the NYSE. Would you think that is it better for a fintech to have an IPO in Brazil or outside?
It depends. Depend on your stage, on your size, and the liquidity of the market. For Nubank, going public in Brazil was not an option because you don't have enough liquidity to support an IPO of $50 billion in Brazil. And that's just the way the market is. So the way they structured it, which I found fascinating, was let's list in the US, let's have the BDR to have Brazilian exposure, and let's use this as a marketing strategy as well. I remember that I received 1 share from Nubank. I've never been an investor, never had any relationship with them, but I received one share, and they did that to engage the community, to engage the customers, and the IPO was also a marketing strategy. So for them, it was the perfect setup. I would say that for a company that is looking to IPO, they must consider a lot of different things, but the most important ones are you planning to expand internationally? If you are, going public in the US might be a better option, because now you have a share that is listed in like Neste or Nasdaq, and this is an asset that you can trade. So let's say you want to expand to the US or Europe. You're dealing with an entrepreneur that lives in the US, have a business in the US, and you want to acquire their business. If you have shares listed in the US, you have an asset that this entrepreneur is willing to sell to you, because it's tradable for this specific entrepreneur. Is something that he reasons with. But if you have an asset that is listed in Brazil, why in America building a business in the US would sell to have some shares and exposure in the Brazilian market? So, like, depending on your strategy and depending on the timing of the company, I would definitely recommend to go to other markets to list. So one strategy is if you're going international or not. Another strategy is if you need talent. Are you looking to hire people from other countries? If yes, your stock options program are going to be based in the U.S. market. You're going to follow the U.S. law. So you create a lot of security around your asset that promotes your company to hire the best talent overall. So I would say there's a lot of the different questions to ask, but those two are the most important one.
Just a follow-up on that. Do you think it's easier to attract talents, either, national or international talents, if you are publicly traded?
Absolutely. If you're public traded, there's no question about how much is worth your shares. Your shares is worth what the market says it's worth it. That helps with clarity and transparency over the negotiations with top talent. When you're trying to hire a senior manager to your team, one of the things that you discuss a lot is a stock options program. And when you're private, a lot of uncertainty is considered on those negotiations, because for the last 5 years we didn't see any IPO in Brazil. So if you're going to work for a company and you're going to have stock options from this company in Brazil and the company is not listed, what is your path to liquidity as an employee of this company? So this is a super important question. If you're considering working for a company, you must consider how liquid is the shares of this company. And if you're listed already, you don't have that question, right? So it's easier for hiring senior talent.
And Caio, thinking about when you're thinking as a fintech to have an IPO, how easy or difficult it is to balance, your strategy with all disclosures that you have to have. Does it make sense? Is it worth?
Yeah, so as Benti was saying, I think like IPO is just another milestone in the company, trajectory. And there are great companies that never went public. There are many great companies that are still private owned and they're run as private companies. However, when you're deciding upon should I do an IPO or not, I think that's one of the key questions that you need to ask yourself. How comfortable am I of having all my strategy, all my numbers, everything out there in the public, so people can look into it and ask questions and make us more understandable. Of course, that there are some things that you don't need to fully disclosure. Some part of the strategy, the market is used to this. They know how to work with confidential information and all of that. But in the end of the day, there are also benefits of having your numbers and your strategy out there in the door. You must be much sharper. You must be much better prepared, communicate much better, not only to the external market, but also to your team, to all your stakeholders that are involved. So yes, it's a balance, and I think this is a skill that must be developed inside the company on the reporting side, on how to prepare for an IPO, how to list, how to manage stakeholders, how do you build your cap table prior to the IPO, in the IPO itself. All of those things, they are just a construct of how you're going to be as a public company. And I think in 2021, we saw something that was called the SPACs, right? So were the public vehicles that you could just de-SPAC a company and do a reverse IPO. And I think there were maybe one or two that were successful, but there were many companies that tried to cut short the path to an IPO by using those vehicles, and the results are very clear that didn't work. Because on the other side of the IPO, you have retail investors, institutional investors that are actually putting their money in your stock. So if you don't have the muscle to manage that, it's better for you not to go public, And as I said, going public, I think it's more a desire or an ambition from the founders than a need itself. As I said, there are great companies that are privately owned, and they're run as super well. But there are advantages and disadvantages to those models.
And I also have a follow-up question for you. As a journalist, when I cover investments in new ventures, I always think that the IPO is the classic exit. It's the way for companies that invest in these new projects and startups to exit the investment. The fact that the IPO market is so thin, does it make investing in fintechs less attractive right now?
No, I don't think so. I think IPOing, as I said, is a construct of many factors, right? You need to have a large enough market. You need to have an amazing growth story, an amazing team, an amazing product, amazing financials. So if you look at the subset of companies that go public, it's actually a very small subset of the overall VC world. On the VC world or private equity world, most of the exits are through M&As, right? Mm-hmm. So we just saw, for example, Wix that got acquired by Google, a cybersecurity company, a $32 billion acquisition. But 80-90% of the companies are going to be, the exits is through M&A. Mm-hmm. The very few ones that have the performance, the growth story, the financials, and actually an important factor, as Benti was saying, where to list is the investors on the other side, they need to understand your story, right? So in Australia, for example, there's a great market for IPOs of marketplaces because the investors, they know that the Australian stock exchange has a lot of marketplaces and you can list there. While in Brazil, there are very few. So, it's a very complex problem to solve, but I would say the very best companies can IPO, but they don't need to. But the classic exit is through M&A.
And thinking about QI Tech, you were already big enough to go public, I think. And I think a lot of people in the market expect it to happen at some point. Why haven't you yet? Is it a matter you haven't decided that you want to go public, or maybe this is related to the timing? Maybe the market's not doing so well and you decided to wait.
Let's go back to the question one. I have nothing to do with the money. Okay, so going public is a journey. It's not one step that you do overnight. Uh-huh. So we've been preparing the company to be public at some point. Going public is not part of our end game. If at some point we go public, it's because it makes sense to the company. So we are concerned about generating profits and returns not only to our investors, but also to our team. So going public might be a way of giving the team a give back, having a listed share for them to access. That would be something to consider. We are super concerned about our team, people that trust us, that is working at QI, that is working hard to make sure that the company succeed. So this might be one strategy. The other thing is to get ready. It's a 1 year work, at least 1 year work. So we've been doing that. We've been preparing the company. We've been adjusting all the accounting and everything to the principles that we need in order to go public. But going public is not an exit strategy for us. Going public might be another step towards the next phase of growth of the company. So if makes sense, when makes sense, we might go. For now, it doesn't. It simply doesn't.
Just out of curiosity, if you were to go for an IPO, would you do it in Brazil or outside?
Probably outside.
Nasdaq?
Probably Nasdaq on ICE, yeah.
And then talking about the market, Caio, do you think shares of fintechs might be more volatile than shares of other sectors? And if so, why?
I mean, you mean on the public markets?
The public markets, exactly.
Yeah, I mean, I think it's very hard to build a basket of things, like fintechs, there's a lot of stuff in there. I think there are moments where, investors are valuing more stability. So maybe SaaS companies are, trading at higher multiples, while on the other side, they're valuing more growth and growth capturing, which fintechs allow investors to do so. Other times, you're just buying utilities, companies for dividends, and that's completely fine. I think, as I said, going public is a very important milestone. Only the very best companies should do so. In the end of the day, what is important when you look at the free float of that company, which is the part of that company that is being publicly traded, usually there's a specific portion of that free float that is owned by funds that helped you go into the IPOs and stabilizing, the stock pricing and all of that. So volatility is a part of the game. If you look at the public markets, it's always up and down. But as entrepreneurs, that's not should be of course you need to keep the price at a certain range, but more important than yesterday prices is what you're planning for, the next 3 months, the next 6 months, the next year, the next 5, 10 years. So having the stomach to deal with the IPO is important. But again, if you look at the very best investors, they're not the ones flipping around, stocks here and there. They're holding a lot of their positions. They're actually buying more when the price goes down. The very best entrepreneurs, they're not super concerned about yesterday prices. They're thinking about how do I maximize wealth or grow for the next 10 years. So it's a very long-term game. The market makes it shorter. You need to play the short-term game with the market, communicate, educate the market, and make sure that you're playing the game that must be played. But also, if you're building for 10 years, yesterday price is as relevant as anything. If you were to ask Benti how much his company is worth today, that doesn't really matter, he has the resource, has the team, the problem, the technology. So why is that? I imagine that would not be your first question in the morning, so.
Not at all.
So again, it's part of the game. You just need to learn how to play. That's why it's important to have talent that knows how to play that game as well. And I think that's a very important shift as the company matures to bring that talent on board.
Yeah, and part of that game is macro. You must understand the macro environment. Right now, basic interest in Brazil is 14.25. So all the investors, they consider it. They have options. They have the public market to invest in. They have government bonds to invest. And they have your company to invest. So the decision here, I'm pretty sure Caio is always looking and following the macro trends because everyone is looking to the long term, 5, 10, 20 years. But you have to consider the short term to make your decision. And the short term right now is not a market to go public. I mean, 14% as basic, you must have a clear picture that you're going to grow at least 30 to 35% on the next few years for you to raise capital right now. Because the trade-off is 14%. 14% is what most investors are using as the minimum cost of capital for them. That said, understanding those macro movements and understanding what you should do based on the macro you are is super important on the short term. But the view, I totally agree, is long term. You don't build a company to flip it in a few years. You build a company to last, and that takes time.
We have 2 minutes, and I'm sure here we have people who might be thinking about IPOs in the future. We spoke a lot about pros and cons, but I'd like to ask you both the same question. What is your best advice for a fintech company who is now thinking maybe in 2-3 years doing an IPO? Starting with you, Bent.
Okay, so keep building, keep scaling your business. Don't be concerned about the public market. The macro environment is gonna change. We are going to leave low interest rates again in the near future. I don't know when, but when the time comes, be prepared. And that's the best advice you can get. Keep building. Don't look to the public market right now. Focus on your operation. Focus on growing your business. When the window opens, everybody's gonna know it. Everybody's gonna notice it.
But then should those companies start operating as if they were already public, like the accounting and all the information to the public? You think they should do it ahead of time?
They should if they already have scale. If they scale enough, if they grow enough, they should do it. If they don't have a minimum, I would say, $200 million in revenues, I wouldn't be concerned about that right now.
Okay. And Caio, what is your best advice? And we have 35 seconds, please.
I think it's very similar to Benti. You know, investors value entrepreneurs that build, ship, and continue growing and capturing opportunities. I think the only thing I would add is that there are some companies that, you know, they keep doing all of that and then they just want to go public from one day to the other. I think what Benti is doing here is very important. You know, he's educating the market about QI Tech. He's talking to, you know, potential investors. So companies should be doing that work of educating the investors about their business models if they have scale and they're actually serious about it. So when the time comes, everybody already know and saw their progress throughout these 2 or 3 years. It's a much easier story to sell than just knocking on the door and asking for money.
Thank you so much. Thank you so much, Caio. Thank you so much, Bent. Thank you all for being here. Thank you.
Thank you, guys.
Obrigado.